Let's see. Is that better? That is a little better, isn't it? All right. Welcome, ladies and gentlemen, to the Human Performance Lab. Traders, those that are seeking to fulfill intention, welcome, welcome, welcome. It's good to see everybody here. It's good to be here. So, I had my first expense trade or my first expense day in a while. I don't have many expense days. Oh, it's not showing up. I had expense day today of a little bit over $1,200, which is honestly absolutely amazing and probably one of the best things that could have happened to me. So I trade cash, okay? I love trading cash accounts, and there's a reason for this, all right? Because what I can do in cash accounts is completely different from what I'm able to do in a prop account, okay? I much prefer trading cash. I don't like all of these rules in the prop accounts, but if I'm going to help individuals develop into consistently profitable traders, I need to do it in a way that's going to work for the majority of you. Majority of you are doing prop accounts, maybe because you want to have limited risk. Maybe you don't have the finances to put account together and those type of things. So I need to really pinpoint this. And today I turned around and took a position in a prop account that should have been reserved strictly for a cash account. And is that better? There we go. That's better. I just didn't want to cut my head off on the camera. But anyways, I took a trade, and when I took the trade, I wasn't paying attention to risk. And if I'm going to develop myself into a good trader, let alone help others develop into a good trader, that is something that I cannot continue to do. And so this is absolutely amazing. I love having the expense day today. I love where the expense trade came into play. I love the fact that I hit the max that I wanted to expend on a day, and I continued to trade through the live session. And guess what? I would have been profitable on the day with the next trade. And you know what? That's okay too. Because when you have an expense, sometimes you just want to break something, right? Keyboard, throw a mouse, whatever it might be, right? Sometimes you're just so distraught that you just want to crawl up in a hole and hide, okay? Low-key, thank you. I appreciate it. No, this is absolutely amazing. This was the humbling experience that I needed, in this process, going from prop to we're going from cash to prop. So no, this is so amazing. So what I'm doing today is I'm going to completely revamp my risk reward. Okay? Completely. All right? Now, here's the thing. I still believe that gathering inventory in trades is the best way to possibly trade. Okay. And when you do that, risk reward ratio no longer becomes that big of a factor. Why? Because you turn around and when you're all in and all out, risk reward makes a lot of sense. But when you're scaling into positions and you're scaling out, risk reward doesn't make as much sense anymore. Why? Because when your entries and your exits aren't the same, it's very difficult, right? To have, what your risk reward ratio is. Profit factor becomes more important. Profit factor becomes more important. And what is profit factor? Profit factor is taking your win percentage, your average win, your average loss, right? And calculating that together, and you get a factor of 1.2, 1.3, 1.4, whatever it might be, okay? And what it's telling you is what your percentage of revenue is compared to your losses. So if you're a positive over 1, okay, that means that percentage, the two numbers that are behind it, or a single number like 0.05, right? 0.05 would mean 5%. You make 5% more than you expense, okay? So profit factor becomes extremely important. But guess what? I'm also here, and individuals coming in are new sometimes, right? And trying to teach to scale in and scale out, volume profiling, auction market theory, footprint charts, how to read volume, delta, and all this other stuff, I really feel like it can be overwhelming to people at times as well. I mean, granted, I took my first trade in 98, okay? I've been around the block a few times. I spent $120,000 in trading development and trading psychology over a course of about 10 years, all right? Guys, I've been around, okay? I've made almost every mistake that I can possibly make in the markets, and guess what? I'm still making mistakes, and it's still beautiful because I'm still learning, and I'm still here, and I'm still in the frickin' game. That is what I want to be able to develop individuals towards. So how do I do that? How do I do that? I make this simpler, especially the entries. I don't take away the tools. I take away what can be viewed as complicated and I make it simple. All right. And that's what we're going to be working on in today's session. We're still going to be utilizing auction market theory. We're still going to be utilizing areas and volume profiling. We're still going to be using footprints and delta, but we're going to make things simpler, and we're going to know the risk reward before we go in, and we're going to be all in, and we're going to be all out, and we're going to be trailing our stop as well. Okay? Because that I believe is what it's going to take to pass these dang prop firms. Okay? Because that, to me, is what's going to allow us to trade through the rules. All right. I'm also going to get a prop account now too. That's at a smaller dollar level. One, because I don't need the full risk amount if I'm not going to be trading these minis. I'm going to be trading these micros. Okay. And why the micros? Because we could trade 4 micros and still make enough money to easily pass a prop account over a decent amount of time and be able to get into the funded arena. This is the game I'm going to start playing. This is where we practice that game, is in this moment. And the morning of the US session, it's when we turn around and focus on trading. We take the lessons we learned in trading. We bring them to the practice field, to the laboratory. We test them. We practice them. We bring that work back into the live trading, and we demonstrate our ability to grow and to learn. And when we grow and we learn, that's development, my friends. That is how we develop into consistently profitable traders without needing to be perfect. Can't run away. Thank you so much for the like. I truly appreciate you. Arbit out. Thank you so much for the follow. I truly appreciate you. Everybody watching right now, truly, truly appreciate you all. I would not be here right now in my development and what it is that I am doing without you guys here, without your guys' support, without just this process happening. Because as much as you guys might feel like I might be helping you in some way, going through all this information is helping me even more. So thank you so much. I truly appreciate each and every single one of you being here, and I truly appreciate you all walking down this journey with me, because that's what trading is. It's a journey, and it's an ever-changing journey, and it's so much more fun to walk a journey with a community than it is to walk alone. So thank you. Let's get into it. Oh my goodness, this is fun. All right. So first and foremost, one of the things that I want to do is I actually, and some of you may not like this, and I apologize in advance if you don't, just hear me out on what it is that I'm going to look at doing for a moment, okay? I am still going to stay in the NASDAQ. I am going to switch over to the micros. Why? Because I think the micros is so much more easier to manage than the minis when it comes to the small risk that we have to work with in the context of these prop firms. Okay, I think the micro is too big of a contract for the volatility of the NASDAQ. All right, I already knew that. The lesson set in with me today. Okay. It set in with me today. It took me a little time to wrap my head around it. 50 cents is like playing penny stocks or not penny stocks, but penny slots over in Vegas or something. I'm just like, no, this is beneath me, right? No, 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 no. Nothing should be viewed as beneath anything in the game of trading. So I had to get over that. Sorry, I'm getting my chart set up here so we can get through and we can start doing our pre-market analysis and we can get in here and we can start trading. All right. Now, next thing we're going to do, we're going to replay a day. All right. We're going to replay a day and we're going to put this into context. Somebody, anybody, give me a date between the end of March and Tuesday. So March 31st to Tuesday, July, or to actually, no, we'll do July. We can do yesterday's data. So July 21st. Okay. March 31st to July 21st of 2026. The only reason why that date range is there is because that's how much data that I have right now. Okay. So just give me a date, something that you would like to see in the US market on a particular day. And let's go ahead and plug that in. I'm going to replay that date. Thank you guys so much for the like. Thank you so much for the follows, everybody. I truly, truly appreciate each and every single one of you. If you have questions, please, please ask. That's the only way we learn, right? Is by asking questions and making mistakes. So I guess there's two ways we learn. And no question is dumb. Trust me, no question is dumb. Well, unless I ask it. I was a jarhead though. So, muscles are required, intelligence not essential. Sir. All right. Anybody have a date? Anyone? I'm going to wait for about another minute for a date. And then if not, I'm just going to pick one randomly. Probably something in June. What order flow platforms you recommend and use? Okay, so order flow platforms. Excellent question. Muscle, thank you so much for the question. All right. Order flow platforms. Well, as you can tell, I'm using deep charts. Okay. So I've been around. I started with Sierra Charts because Sierra Charts was one of the very first ones that actually had footprint charts that when they first started coming out back in 2011, 2012. Okay. So Sierra Charts is an option. It's a cheaper option as well. The problem with Sierra Charts is one, it's old and it's clunky. Two, you can do so much with it, but you almost need an engineering degree in order to be able to run it. Okay. Ninja has volume profiling and those type of things that you can do as well. But most of that is all aftermarket and you have to purchase those indicators and those type of things. You can also get a lifetime license for it. I have Bookmap. I haven't used it yet. So I don't really know in the context of that. I bought it, but I haven't used it because I really, really like Deep Charts. Atos is another good one, a little bit cheaper than Deep Charts. You can also do a monthly charge on that. I am working on Tradovate. Tradovate. I'm working on Tradovate. I have an individual that's working on developing some things that we can do in that for a free version for individuals, right? That don't, you're already paying for so much in the context of trading, right? How can we make it cheaper? The Tradovate aspect is a little bit more difficult. Again, it's kind of like the whole idea of Ninja. You got to have secondary indicators and those type of things to add to it. Personally, I'm really liking Deep Charts. It's simple to use. It's easy. It doesn't crash on me, and it doesn't take a lot of resources. All things that I need when I'm here trading, streaming, and doing all the other stuff that I'm doing on a single machine here. So, Muscle, that's what I could possibly say with that. I am terrible with names. Kata Sands, thank you so much for the follow. I truly appreciate you. So yeah, that's the direction I would go with Muscle. They do have the heat map as well. Now, guys, I'm going to be honest with you. Okay. I I actually retired from trading in December 2019 due to a really terrible divorce that messed me up emotionally. I was done. Okay, literally, almost killed me in 2023 in August. Blood clots because I just wasn't moving around. I wasn't doing anything, and I really didn't care. Pretty much gave up. I came out of retirement in April. All right. May is when I got my charts, and I got 3 different platforms. I picked up Sierra Charts, I picked up Bookmap, and I picked up a copy of ATOS and Deep Charts 4. Okay, I went with Deep Charts. All right. Heat maps, that's something that came out after I retired, and honestly, I'm not any good at reading them whatsoever. I have no idea. People say that you can use them for rejection and all sorts of stuff. I don't know. It boggles my mind. I don't understand the concept. I've tried following it. I watched it behind the curtains on one of my other screens for a while, and I just couldn't figure it out. So if you do the deep charts things, unless you really want the heat map and you know how to use it, I would just go ahead and just get the regular program and not heat map, not the heat map option. All right. That's just my own personal opinion on that because I'm just not good with the heat map. I'm not going to sit here and tell you guys that I can do something that I can't do. That's just not on my to-do list. So let's go ahead and go with a date here. Let's do June 9th. Random day, Tuesday. Sounds good to me. June 9th at 9:30 in the morning. We're going to, you know what? We're going to do this. We're going to start it at 8:30 because that's when I usually do my PMA. News usually comes out around 8:30, right? I really like to have my pre-market analysis done, completed, all of that stuff way before I start trading. And it takes me about 10 minutes in order to be able to do it. So what we're going to do is do the PMA starting at 8:30 in the morning on June 9th of 2026, okay? And I'm going to go run through the whole PMA. Do you have questions on the PMA? Please, please, please ask, all right? Pre-market analysis. That's going to take about 10 minutes. I'm going to do the countdown on the timer so you guys can see how long it takes to kind of prepare for your day, when you can start kind of preparing for your day. And then we're going to fast forward, go to 9:30, and we're going to start trading. Any questions? Questions, comments, concerns? It's a good time for that when we're waiting for the charts to build. All right, charts are built. We're going to hit play. Let me get these drawing objects off this chart first. Let me get all the drawings off. So we're starting from a clean slate in all of our charts. We'll hit the start button and we're going to play this out. Are we ready? Here we go. Data starting. All right. First thing we do, so we come over here and we look at a daily perspective. This is a daily perspective of all time frames. Asia, London, US, all included. Now, since June 2nd, we have actually been in a rotational market, okay? And that's what this developing profile is here. We've been in an uptrend for a long time, and then we started trading in a range, and we're still trading in the range to this day. All right. We haven't broke out of the range yet. We did extend the range to the downside a few times, but we have not broken out of the range. So we're still trading in value. So what is this volume profile telling us? Okay. We have a candlestick on the left, right? Up, and then purple is the down. So we are coming off value area high down to value area low. What is value area high and value area low? When you set up your footprints, you can set it up to whatever percentage you want. All right, 70, 80%. I use 70. I used to use 80. It doesn't really matter what you want to use. It's completely up to you. That percentage is saying, I want to know where 70% or 80% of volume has traded around a particular range. Why is that important to know? Because where the volume is traded is participants. If you want to understand auction market theory, you have to understand something. You have to understand something. The markets are an auction. That's not price. It's not anything else. Price is merely a result of participants. It's an auction. And the thing we have to understand about auctions is when they're efficient, for every buyer, there's a seller, for every seller is a buyer, and price action is just going to be flat. And so what happens is price doesn't just stay flat, it moves. Why? Because one side gets aggressive over the other. That's it. You have more participants. So if you look at the bars, my up bars and my candles are green, my down bars are purple. So we're just going to go with colors for a second. Not because we trade colors, it's just easier to understand the concept, right? So we have a path, and on the path where we walk, it's clear. There's no color. It's just call it white if you want to. There's just no color. It's just blank. In front of us, it's green. Behind us is purple. And when we look around, we see participants. And when we see participants gathering more on the green side, we want to go long. When they're gathering more on the purple side, we want to go short. Okay? That's the easiest way of explaining auction market theory. That's it. We are just looking for the participants, the players in the market, and we want to use the players to tell us what direction we should go down based upon the direction the price is going down. So you're really using a confluence between participants, volume, and price. And price is merely the result of what the participants are doing. That's why price moves. It's a result. And so if you're just trading price alone, you're only trading the result of the auction. You're not paying attention to the participants. And auctions can't exist from price alone because it would just be a flat line. You have to have participants. And if you're not paying attention to the participants, it's very difficult to truly be able to understand what price is doing. Not saying you can't, not saying you won't, I'm saying it's difficult. It's more difficult than learning the auction. So what we have here is 70% of all volume has traded between this range. And we can take a look and we can just see some very simple things. We have a VPOC, volume point of control, which is where the most volume has traded. We can see this range here, whereas very little volume has traded. It's like a valley, right? And we can see the mountains, the hills, right? That's where the most volume has traded in a particular area. So the most volume traded here, the most volume traded here, the most volume traded here, little volume traded here, very little volume traded in here. And now we have the gray areas. And that's just a little tiny gray area, right? But it's still there. And in the gray areas is where the lowest percentage of volume traded. And what we want to look for in those areas is the low volume nodes. These are the most important areas in terms of support and resistance that you'll possibly find. Okay? Because they work. And they work because of the participants. And now, why do they work? When price trades around high volume, what happens? You got a lot of participants in that area. Okay? A lot of participants happening. When you trade in low volume, very little participants are happening. So volume in low volume areas, price doesn't usually spend a lot of time in those areas. They spend more time around the high volume areas because it takes time for the participants to develop positions around those areas. And so look for rotation, look for rejection, price not spending time in those areas. Not as buy and sell, anticipated rejection. Rejection happens, price forms, participants are shown, and it gives you the direction to go in. Not that you don't have an idea of what direction you're going to take, but we remove bias out of the equation. And why do we want to move bias out of the equation? What happens if you get stuck with a long bias and the market's short and it starts to trend down and all you're doing is just trying to buy lows, you're just trying to buy lows, you're just trying to buy lows or trying to sell highs or trying to sell highs in an uptrend? You're going to get smoked. So rather than building a bias let's turn around and understand auction market theory so we can look at the participants and we know what areas we want to get into and we know what we want to do. And that's how we build a good, strong PMA. Now, price action is moving off of these highs in here and move through here. Where should we anticipate price action to go? High volume acts as magnets. And then the price action moves rotationally between value area high and value area low until it moves into unfair lows, finds an area of rejection, rejects to move back into value. Or it breaks the low volume area, moves into lower areas, and then possibly starts to trend. And that, my friends, is how we build a PMA. So I don't really have anything above me, but I am going to index this area because this area here is important. Why? Because I don't expect price action to spend a lot of time in here. I'm anticipating it to be less rotational in here than rotational, okay? Now, at the same time, what's going to happen eventually is this is going to produce a wider profile as long as we stay in value. So this will become rotational at some point in time, but rotational between the area to build that area up in terms of volume. What does that mean? That means we can trade this in an area of unfair lows, unfair highs, and scalping. These areas here, we can turn these into scalp trades, day trades, swing trades, position trades, depending on how big the value area is and what time frame we're on. This is a daily chart, doesn't really get much bigger than this, all right? So these areas here, you can turn into bigger moves. Here, smaller moves, scalping. This way, you learn an entry criteria that you can then take to every style of trading. Most individuals will pick a style of trading and then they'll create a whole new entry mechanism or strategy for that particular trading style, right? What I'm suggesting is one entry system for every style of trading you want to do. It will make you more consistent. It'll be easier to practice. And all you're doing then is adjusting your money management because your entry criteria is still the same. Now, this is our area here, and this is our low volume node down here. Now what we want to do is we want to take this little chart here and we want to say, okay, what is this chart doing? Well, we're trading in value. We broke out. We started to trend. We have areas of value in here, but we're still trending with areas of value. That's exactly how the market moves. It's the way the market always moves. Out of it, in value, imbalanced, value, imbalanced, balanced, imbalanced, balanced, imbalanced, all over the place. Balance, imbalance, to imbalance, to balance, to imbalance. What's balance? Trading in range. In value, what's an imbalanced market condition? Trending. And that's the way all trends work. And some areas of balance are tighter than others. Some of them are wider. They break out and they come back into their range. All right. So what we want to do here is we want to take a look at this whole area here and say, okay, where were we in last in balance? Where were we last in trend? Where did we break out of the last period of balance? Well, we have this area of trend, these areas of balance. Price action comes back and tests this low here. Then we get a bar that breaks out and closes below. That is not a breakout bar. That bar that closes below this low right here, let me mark it for you so it's easier to see. Where's my line at? Where is my line? There it is. Thank you. There's our line right there. Let's zoom in. You guys can't see that. Sorry, I'm talking about something you can't see. Up, down, value. This whole area, trend, back into value, We come back into here, we test into here, we close below that. This bar is not a breakout bar. Don't let anybody fool you. It's not a breakout. What is this bar? It's a market shift. And why do I call it a market shift? Because we just broke out of value. And the moment we break out of value, three things can happen. We can go into a tight range. We can move back into the previous range of value. We can trend. Those are the three things that we can do. This bar is the most important bar on the chart. Anytime a breakout happens, this is the most important bar. It's why I call it a market shift bar. Okay? And what we do is we draw a custom profile from that bar. And it's this bar here, the close below this bar. Now we draw a profile. And we draw our profile, we come in here, we hit extended, boom. There's our profile. Here's our area. This is that area that I was talking about, right, of low volume. Here's our low volume node down here. What is our low volume node matched up to? That low volume node right there, below value area low. And this one down here. So those are our two areas for long positions. Now, let's go up to the top. This area here is where I marked out for the possible low volume, right? Where we're looking for price action to just kind of trade through. Okay, it's also here in low volume within the profile. We have the higher volume. This is our value area high. We're now going to index these two areas here of major areas of importance for us for potential shorts. But let me show you something. This is where we take the bias back out of the equation, and this is how we do it. So we got this bar here, which is all the way over there for some reason, but that's fine. We won't mess with it right now. And we have these two areas down here. We're going to blow this chart up a little bit. And we're just going to start with the lows down here. If price action comes down from this area, and it trades down, we're going to be looking for potential long positions out of these areas. And so what we're going to do is we're going to mark this and we're going to turn it green because we would be willing to look at going long in those areas. Now, what happens if price action continues down? We do have low volume areas around here. What's the problem with those? They're not here in the context of the daily chart. But what we can do though is we can still index them. And why is it important to index them? Because if price action gets below this area down here, that's where we want to start looking for potential shorts. But wait, Tony, price action's all the way up there. If we get all the way down there, it's going to be too much of an extended move. We don't want to short there. You're absolutely 100% correct. More than likely, right? We're looking at 400 points down already. Okay? Probably not. But this is also a setup that could possibly happen in days ahead. Not just today's session. But we want to be familiar with all scenarios that can happen. Because trust me, I was trading the flash crash of 2010. Price action can get pretty gnarly at times. You want to make sure you map everything out that could possibly happen in the market. Now in here, look for potential scalps as you're coming up. These areas in here, you can look for potential short positions from. So we're going to put those circles in. We're looking for a short. Now, notice that what I'm not saying is, if price action comes into this area, I want a short. I want a setup. Why? Because of the volatility of the markets, the width of the markets. We want to give it time to set up, not just trade from these areas. All right. And then if price action gets through this area up in here, because of the low volume in here, we can come back up and test VPOC, right? We want to come in and say, okay, potential long positions up here. And that, my friends, is how we create a pre-market analysis without having a bias. We already know what we're going to do. We've mapped out our areas. We have our hunting zones. We know exactly what we're looking for. We have the path. We know exactly what we're expecting to see in order for us to be able to take a shot in our hunting zone. And our shot is long, the shot is short, but notice we're not using the same exact area to go long and short from. We have particular setups that we're looking for in the context of the areas themselves. So we always know when we're down or upwind from our hunting zone. Always. Not trying to trade long and short from the same area. We want to see the pullback into the area, come down to the short to hold it as resistance. We want the market to close above this area, come back down into a pullback, and then we can look for a continuation play to the upside. Same thing down here. Any questions, any comments, any concerns? I did a lot of trading there. I did a lot of talking about everything. And look, it's only 9:48 in the morning. Or I'm sorry, 8:48. 8:48. Took, 18 minutes to go through all of that. 18 minutes. I can do it in 5 or 10 when I'm not explaining everything. So what are we going to do now? We're going to fast forward time. Now, here on this chart, we have our areas. Our areas are already printed. We already know. Everything is already there. We're ready to go. I don't think the areas here came in though. Oh, there they are. Beautiful. I just had to click on them. Okay. So yes, all the areas are now on our chart. That's one of the reasons why I like deep charts as well. You don't have to link charts. You don't have to do anything else. Everything just kind of just goes through, all through by coming in and saying, okay, my drawing objects, the drawing charts, I want these charts to be linked together. It's that simple. That simple. That's why I love using this software. It's so simple to use. And look what we did. We already came into this area and immediately started trading lower. Let's fast forward. It gets 9:30 and see what happens. So as we're coming through here, I'm going to slow it down just a little bit. Okay, as we're coming through here, what are we doing? We're making a lower low right down here, right? We have a little bit of rejection here, rejection of a tail, but look at the high volume that came in on this bar. Look at the high volume in here, okay? The bar closed up. What is that telling us? The high volume that's in here, that's kind of trailing off, it's not sellers coming into the market. That's buyers. How do we know? If it was sellers, we would have closed below. We would have closed down here someplace, possibly extended the range, moved down lower. No, price action closed up. That's buyers. That's how you confirm rejection, not tails. Use the participants. Look at the high volume here. The high volume came in here. If this was sellers, we would not have closed up here. We would have closed down here. And what did we do when we came up and we made an extension above this high here? We closed back down again. Okay, we could be moving back down south, but we haven't tested down here at all yet into the high volume of this range. What does price do? Tests into it, rejects. Look at the lower volume. down through here comparatively to here, much higher volume. That means that sellers are stepping away from the lows as lows are being made, and buyers start stepping in. Test again here to where the sellers were strong right here in this area. What happens? Reject, and price moves up. Oh, shoot. We're already at 10:11. I went way too far. Okay, we got to back up. I didn't realize I was in an 8 time when I was talking there. I apologize. I thought I moved it to 1 time. We got to start over and go back to 9:30. I was talking too much. But that's how we use order flow to tell us rejection, to tell us what we should be seeing in the markets. So we got to go back to 0930 on that particular day because we were already at 10:11. I'm going to make sure it's on 1 this time. Set. See? Now we're setting it to 9:30 the same day, June 9th. And here we go. And all of our lines and everything else should already be there. If they're not, it'll just take me a second to put them in. Because I don't have to draw all the lines again in the areas. I have a really good idea of what it is that I am doing on this particular day. So what do we have here right at the open? Price action comes up, comes in, and trades right over our area. And what are we looking for in this area? Potential scalps. Now we have IB. We have IB in the area, which is extremely helpful. We break this low here, right? We still have our lows way down here. And what happens around this low? We come right into the high volume here, right into the high volume of this low. And what do? We reject. Look at the low volume here. Look at the sellers of 111, right? Look at the buyers, the low buying pressure in here that's moving price action up. We have a lot more sellers over here than we do over here. Price action was not able to break that low. And look at the buyers that stepped in. Very low volume pushing price action up, and the buyers step in heavily. And price action goes up. My initial balance is set for 15 minutes instead of 30 or 60 that a lot of people use, because I will take trades around 9:45. Mid-range here, initial balance high, initial balance low, currently at 9:31 in the morning. Because I don't trade between 9:30 and 9:45, I am going to speed this up just a little bit, but I'm not going to speed it up so much that I'm going to lose track of what's going on. We're at 9:32 right now, 9:33. Trying to get this kind of in order. And then look, we break through those lows, right? And we're continuing lower. We're holding this now as resistance, not as support. With some important information. Did we come down to any areas of importance here? We sure did. Let me slow this down again so we can see and we can take a look. This is the area that we came into right here. What does this area look like? Came right into the high volume all over again at the last rejection area. Price action didn't even bring it down to the low. We rejected off of the high volume all over again. We have the high volume down here. Anticipate this area to be tested. This high volume acts like a magnet to price. We've got very high volume up here, which is now telling us that this could be a good, strong area of support. So possible rotational market to the upside is what we have. Rotational market with a bias to the upside because of all this volume coming in. But notice we cannot find support or buyers above this area here. Okay, we're seeing some rejection. It's important. Important information. And price action finally gets through it. Comes right to our area again and rejects. We test that area again, right? We test the area, can't break the high. See the high volume here? I'm anticipating the high volume to come in here and possibly break this high, all right? And we have this high volume in here, but it's not really off of the lows, okay? We extend the range a little bit. We don't continue. Do we come down here and break the low? Because think about this, for a trend up, we need higher highs and higher lows. If we're going to come down off of a trend, we need lower lows and lower highs. So we want to see this low break if we want to go off of a short from this area. And why can this area be a short? Remember, this has a whole area of low volume. If we don't close above this range and come in, we're not looking long. We can look short off of it because it's acting as a level of resistance. Now we just traded below this low here. So what should we be anticipating now? A pullback. Where would I expect the pullback to go to? Someplace right here in this area of high volume. And so what I could immediately do if I wanted to is I could put one of these up right here. And my entry would want to be right here in this area and my stop right up here, risking 56 ticks or $29 on 4 micros. And then where we'll be looking for our minimum target to at least come down and test this low right here, 2.43 to 1 risk reward ratio. Now we're looking for a pullback to short 4. Are they different? Yeah, that's fine. Whatever. Right here. Let's see if we get the pullback. Price action is continuing lower here. It's currently 940. It's not time for me to be able to take scalps yet. But if you look at this area, we rejected this low volume, okay? We couldn't even get up here into this area. We turned into a down bar, all right? Once we were in that down bar here, we could look for a continuation short play to the downside, scalping that market down. Too early for me to do it. Let's see if we can get up here into this area. Now that we have our low down here, we can then move this to this high volume area here, which could act as an attraction of price. We can put our target down here below, just above this low, which could act as a magnet. And if we do that, where are we at? We're then at a 3.76. But where could price actually go? More than likely to this high volume down here. And what do we have now? We have a 4.69 risk reward ratio. But we need price action to come back up here and test first before we can do anything. But couldn't the move already be done by this right here? Sure, but we haven't had a pullback to test into this area. We haven't tested into this high volume. We just moved down and we have plenty of room to come back and test again. And let's wait and see what happens. And then we can turn around and put a stop in of 4, right? So we're going to be looking short, right? So we want to go ahead and do a stop of 4, and we can put all of our orders and everything in before we even get anywhere. And I just want to make sure I'm on that right spot right there. Now, here's price coming right up into our area. Let's see if we get there. We have this high volume here that we're getting through. Coming up, boom. Guess what? We're short 4. Beautiful. We're short 4. We're risking $116. And we can immediately come down here if we want to. We can put this in. We're looking to make $544 on a $116 risk. A lot of strength here, right? This is making our entries and everything else much more mechanical. So we start off the day minus $116. Not a problem. What are we looking for now? We're looking for another setup to happen, another setup to put us in either long. What are we looking for long? Get a closed above this area, a pullback, and a continuation play to the upside. Now, the way that this bar was forming up here, I may have waited for another bar. What I'm trying to do is be extremely mechanical with what it is that we have going on here. And it's also at 9:43 in the morning too, which is still a little bit too early for me to trade. It's okay. We're just trying to take our signals for what they are. $116 expense, and we had over $500 of possible revenue. Okay. Now we're at 9:44. See this? If this breaks, anticipate momentum. And we had that momentum as soon as we broke. And we're still sitting here waiting. Where is it? There. Is it here or is it here? Sorry, I'm paying attention to what's going on here, but I'm trying to do something too. Here we go. That's what I wanted. Thank you. So now price action is coming back up, right? We're closing above the area. What are we anticipating? Price action to move up into these areas. Now we're looking for places to scalp. Oh, man. Oh, I like this. Okay. This is good. This is good. All right. Huh. So I'm waiting for a close above initial balance right now, and then I'm going to wait for a pullback. Starting to get the pullback. We can go ahead and do an initial position into this area right here. All right. And at this point, this high volume, I would anticipate it to hold. So we're going to risk $82 in the position. If we're risking $82 in the position, okay, or our entry is set right here, okay, that means that our stop is down here. In order for us to get a 2-to-1 risk reward ratio, we need to come up here. So we want to be short right up here with our stop down here. Or not short, but get out of the position up here with a 2-to-1 on. Hold on just a second. What's up?
I just wanted to let you know, I have to go to Kroger. So I'm gonna shower and get dressed, and I'm gonna go and have a job interview there.
Oh, do you really?
It's like open interview, so.
That's awesome. I love it.
Yeah,
I love it. No, you're good. Well done. Don't be sorry. So there's our 2-to-1 hit, right? See how I trailed the stop there a little bit? There we go. That position is over with. Now we're up $40 on the day. Oh, I'm loving this. I am absolutely loving this. This is going to make trading live in front of everybody so simple. Simple, simple, simple. And I love it. Now, you can say, okay, Tony, if we have a target up here, why don't we just go after that target? We absolutely could. Most definitely. And if you're going to do that, scale out of your positions. You're in with 4, take 2 out at 2 to 1. Okay. Move your stop to a break even. All right. Maybe a little bit above break even. And then turn around and let the market go. What I will normally do is not in these types of scalps is not take a 2 to 1 risk reward ratio. What I'm looking for is trailing my stop as it's going up and hitting the momentum, finding another reason, another place to enter, and then entering the market again, looking for another place to scale out. That's how I like to trade these. But I'm trying to be pretty consistent with the 2 to 1 risk reward ratio. But my style of trading, I really feel like I will be more comfortable scaling myself out of the position than I will be holding on to it like that, or to getting out at the 2 to 1, because there was a lot more to be made there. I'm going to try to get into this one here just to see if we can get some momentum coming into the market. So we do 2 to 1, right? We need $208 in revenue for a 2 to 1. We're currently at 60.44, somewhere right around in there, right? So now price action's coming up, but look, I'm already scaling my stop out, right? So how do you create a risk reward ratio when you're moving your stop like that and not just doing a 2 to 1 risk reward ratio? Now I'm at 92. I don't even remember what my initial risk was. 98. So basically a 1 to 1, and we haven't even hit the 2 to 1 yet, and I'm already above a 1 to 1 risk reward ratio. High volume up here, I'm anticipating the highs to break. Highs did not break, so I'm going to be a little bit more aggressive with my stop, locking a little bit more in, because we didn't break the highs when we would expect to. That means possible rejection. If the market comes down, I don't want to give up as much of that profit. That's still 1, 2, 3, 4 points. That's still money I'm leaving on the table if I don't grab it. We're now at a 128. I think we needed 204 to be a 2 to 1. We just got stopped out. We're up 168 on the day, and we started the day out negative. Coming right back and testing into the high volume here. Let's see what happens at the lows. If we get above this area here, we might want to look at getting into another long position, because we're just scalping the long. And what are we anticipating? Price action not to spend a lot of time in here, and it's not spending a lot of time in this area. 3 trades, 1 expense, 2 revenue. Let's go. Look at the buyers stepping in here. Look at those buyers stepping in comparatively to the amount of buyers that were over here. Okay, we broke the lows, right? And we're right back up here to the buyers. Do we get above this little ledge of buying here? That's what we want to see. Look at the buyers continuing to step in off of these lows. We're still making lower lows. Look at Delta. Delta's telling us we are moving strong to the downside. We're right back above those highs right there. There's our long. Price action comes right back and tests those lows again. Hasn't broken yet. We're looking at 180 now. Now we're going to need about 360 in potential revenue for a 2 to 1 risk reward ratio. This is probably going to come down and stop us out. So if we think we're going to stop us out, let's reduce our risk as it's coming back up again. We're right below where the buyers are here. Now we haven't made a lower low yet. So did I make a mistake of getting out a little bit early? Nope, there's the lower low. The lower low came in. We reduced the amount of risk that we're holding on to the position. We're back up here. Our buyers are right in this area. We want to see what happens when we get back up to this area. We're in the high volume right down in here for the high volume test. Price actions moving back up again to an up bar. Where's our resistance? Pretty much right where I entered. Let's see if we can get through it. Beautiful. Go ahead and put our stop back in here just in case it comes back against us. We were risking 180 before. We're already up about 100. Let's just go ahead and put us into a break-even trade so we don't take another expense on the day. Price action's moving back up again. Where's our initial stop? About 108. Beautiful. We're locking in about 24. Price action rejected there and came back down again to the high volume. What should we anticipate happen? Price action coming back down here. Do we see buyers stepping into the market? We sure do, right around in that area. Let's see if we go back up here and test the high. What is Delta telling us? Delta strong to the upside. Delta strong to the upside. We're trying to get through the open, but Delta strong to the upside. Coming off now. Do we get through the open? And if we do get through the open, does Delta shift to purple or does it stay to green? Why is that important? Am I trading colors and just purple and green? No, not at all. That purple coming in is telling us that market selling came into the market down here at this area. So now what we're looking for is price action to come back up to the buyers, and we'll want to see the green volume stepping back in from market orders to the upside. And just so you guys know, I have another footprint of a 1 minute chart here. I have an idea for helping us find entry points for these trend days. So price action now, right, closed at its low. We're probably going to see some form of continuation play to test some of these high volumes in here because buyers were up here. All right. So about $50 right now. Let's go ahead and put us in for about a $20 gain. Just scalping right now. That's all we're doing. Came right down here into these lows to this high volume right here. Do we hold this? Price action is still really strong to the downside. We're now through initial balance. This might be the high of the move. We might be seeing possible continuation play to the downside. We haven't broke through this area yet, and there's the break. Good evening, Ram. Welcome, welcome, welcome. How was your day? Did you have a good day? We're getting right back up into the area again of this low volume. Seeing some possible buyers stepping in here. Look for a continuation play to the downside. Skin tight, welcome. It's good to see you. Thank you for being here. And now price action is moving down in favor quite rapidly there. I was doing something else, so I wasn't trailing my stop there, which I should have been. Yeah, I didn't trade today, but good day. How's my day? My day's been phenomenal. Absolutely phenomenal. I was down in the you saw I was down in the eval today, right about $1,200, $1,250, $1,280, somewhere right around there, under $1,300. I continued trading, but I went to sim because I pretty much hit my maximum expense on the day of what I wanted to do in the eval, and I continued to trade after that and was up, I don't know what, $200, $300, $400, somewhere right around there, between $200 and $400 between the two. So I would have recouped my expenses had I continued trading, which is, phenomenal. But it's the fact that I continued. So it was my first expense day in an eval. It's been my first expense day since no, not my first expense day. I've only had like 2 or 3 expense days since even just trading on sim or trading in my cash account. I don't have a lot of expense days. The reason why I took an expense day is I'm traded the eval and I took a pretty significant loss on one single trade. About $1,300, a little bit over $1,300 in expense in one trade. And so what I'm doing right now, Ram, is working on micros, and I'm just scalping right now. Right now, at the moment, I'm just scalping. But what I'm looking for is a new entry criteria and money management for us. Prop accounts are always tricky with consistency rules. They really are. Which is just an expense day, which I didn't blow the eval by any stretch of the imagination. That's why I stopped trading those so I wouldn't, right? But it's the fact that I continued trading. It's the fact that I was able to take an expense and just continue to move on. Not trading outside of my rules, right? Knowing that we were probably going to come off of that other area, but I still stayed there. As you can tell, I'm actually in the minis now because I don't want to take such a significant risk in my position again. So phenomenal day. So like right here, right? Getting into that position where I need to put my stop, a $374 expense is a little high in an eval, right? So I'm going to need to cover that down, and that's actually a very good spot to put it, and it's only a $250 expense. I don't want to take a full expense on here because we didn't come back down through the open and we're on green strong delta. So delta's not coming down at all, telling us that we have market orders selling here, right? We actually have market orders buying. So I want to significantly reduce my risk in this position, not hoping and praying that we're going to come back down again. All right. I am going to take another shot of this though, because of the rejection up here. We do have the delta here, but we keep testing the open. We have this bar, which is going to close here. And there we go. That was the momentum I was looking for. Maddie, how's it going? Oh, Maddie, yes. Yo, down 242 today as well. Phone trading is biting my ass, especially because the LVN I traded was good, just too early twice. With a footprint, ain't no way I would have been down two. Yes. I was down the one today. I was down 1350 today. And I hit my 1350 risk and I needed to stop trading. So I went ahead and went to the second one on Sim. And if I would have continued trading, I've been up 400. We back tomorrow though at a 2.6 profit factor. So one trade gone, get it back as yes. If you have a 2.6 profit factor, Maddie, I'm not worried about you. Not even a little bit. Oh, that's phenomenal. I had one of the best trading days I've ever had. And the reason is one, I don't take a lot of expense days. Two, if it would have been cash, I wouldn't have even been concerned by a 1350 expense. I have to remember I'm in these dang prop accounts, right? So I'm switching over to micros to help me manage the positions a little bit. And I'm going into a much more set risk reward ratio, not necessarily for exits, but also to make things simple. Yesterday in my stream, Maddie, I had two individuals come in here last night and ask. I streamed until 9:30 last night. I know you left because of the whole guy with the gold thing, and yeah. Don't even get me started. But I had two individuals yesterday ask me if I have a mentorship program. And I had to tell both of them no, right? But man, I don't know. I might have a mentorship program here pretty soon that I'm going to start brewing, and that's part of what I'm doing here. That's not going to change anything that I'm doing here live or anything else along those lines. I don't know. I'm working on things. I got stuff cooking. And so I'm really grateful that you're going to be back tomorrow trading. I'm so grateful. I mean, a 2.6 profit factor, man, it's so amazing. I think that my best method that I ever had that I worked with, I think I only have like a 2.27 at the highest. I never had anything above 2.5. That's absolutely remarkable and insane. And yeah, you're amazing. Absolutely amazing. Soon I'll print money. You know what? It's Ram, I'm getting so close. I'm at the point now. See, before when it came to these the last few weeks has been hard for me. And this is why I've been on sim when I've been live as well. You know, I couldn't wrap my head around these prop accounts. Today, I just had a breakthrough. And I'm pretty freaking confident right now. Now, Maddie, leave me alone. You saw what the confidence did to me last night, right? I get it. I get it. I get it. I get it. I understand. Okay. No, this is different. This is, I'm clear. I'm freaking locked in right now. So locked in. Here, let me show you. So, we're going to go to a 1 minute chart. Leave me alone, Maddie. Leave me alone. Let me explain. Okay, let me explain. So if I'm looking here with this risk limit, with my entry here in this area, I've got about a 1.9. Now I have about, what, a 2.25. But where am I really looking at this market to go back to? To probably test these highs here with that volume right over here. That's a pretty damn good target right there. So what do I want to do? I want to be in 4 on a limit order right where price is right now. And did I get in? Okay, beautiful. I'm in. And now here's my stop. Already in. And now I can put my profit target in. And now I'm much more mechanical. It's going to be much easier to follow. You can see my risk reward ratio, which is well over a 3%. I'm coming off of initial balance. I've got VPOC below me. VWAP, excuse me. I got VWAP below me, Maddie, and I'm going long. Yeah, good idea, mate. With these prop, you can't risk, so you only can trade 1 trade a day. Yeah, I traded 3. I had 1 expense and 1 revenue, 2 revenue, 1 expense. Well, I had a very small break even, 1 revenue or 1 expense, and I was down like 1,200 today. And then I went into my next trade and I knocked it out of the park, and I was up like I was up 3,600 in the London session, and then I was down 1350 down, and then made a little bit, and I lost a little bit more in the US session. Ended up being down like 1280, 1260, somewhere right around in there in the US session. And then I turned around and what did I do? I traded my next trade, and I was back above $3,600 again in the sim. So now I was up $5,800 in total in the sim. So I don't know. It would have been a really good day. Been a really good day, but I had to stop, right? Got to at least have 2 to 3 shots. Yes, exactly. I left yesterday because I fell asleep. You mean, did I lull you to sleep? My melancholy, melodramatic voice put Maddie to sleep last night like a little baby. Oh my God, your wife is going to be like, you need to listen to Tony and leave me alone. Been around too with footprints, but so many more trades, and now so few trades on the phone, but they better somehow up to 2.6 profit factor. Now that's so amazing, man. I am so happy for you. I absolutely love the success that you have found in the markets. Love that. It's inspiring, to be honest with you, especially at that level. I'm French Canadian. I'm no freaking Viking, man. I'm a lover, not a fighter. French Canadian, are you serious? The shortest war book ever. The shortest book on military valor is about the French army and it's just blank pages. Pax, how's it going? How's it going? It's good to see you here. Thank you for being here. I'm doing great. I am doing great. I was down in the um evaluation today through the prop firm by about 1280, something like that. I had to stop because I hit my risk my risk stop, not because I blew the account. I mean, I have $4,500 to play with, and I lost about 1260, 1280. I was down about 1260, 1280 in expense, and so I went to sim and ended up being up $5,800 today in sim. Now I'm working on a completely new risk reward strategy that I think will be helpful for everybody as well, as we're working on these prop firms and developing into passing them. Because if I was cash today, I would have been up $5,800 comparatively to 1280 down. And so I really need to work on the risk reward. I ended up taking a shot of 1350 today of an expense. That's just way too much in a prop account. I'm testing and refining trade entry criteria a little bit of more testing, and I think I can cook it soon. Yeah, absolutely. Well, it's kind of what I'm doing here with a 1 minute chart, right? The 1 minute, see, the 2 minutes, great. Okay. Gives me my pullback areas, my high volume, and those type of things, right? But that's something that in the live market is going to be really difficult for me to teach. Where if I can teach a format in the 1 minute chart, something along these lines here, where we have the up, the pullback into the high volume area, and then an up, and then I can put my stop in and know where my risk reward ratio is and all that stuff, looking for targets up here into this area where the high volume is. I don't know. I think that this is going to be much easier for me to explain to individuals and for individuals to find some form of success with than trying to do everything off of the 2 minute chart, looking at the high volume and those type of things. Now, one of the things that I'm going to need to work on is I was up pretty nicely in this trade already here, looking for the 3-to-1. And this is why I don't like risk reward ratios. This is a perfect example for me because a risk reward ratio, you're just stuck in the position. You're going to take a $318 hit when you're up over close to $300 in the position in the first place. That's asinine to me. It's completely asinine. It's backwards. It's like I'm not trading anymore. It's like I'm just, clicking buttons and hoping and praying that it's just going to work out. No, 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 no. So I need to work on managing my positions by scaling into that position. It comes back into my area. I can get back in. I have scalping techniques, all that stuff. This might be what I start teaching, though, in this format, so it's more structured for individuals. We can track and see how well it does over time. And then I can build a program for individuals to teach them how to actually trade over here in another format. So how about yourself, Pax? How are you doing? Sorry, I got in the conversation there with Maddie and Ram. I wasn't ignoring you. I promise. Promise, promise, promise. Prices in value right now in the 30-minute. I took that $315 hit. Ugh. Down 236. Now I got to get it back. Maddie's probably over here laughing at me again. Oh, it's good times. It is good times. Let's see what happens here. I'm trying to, it's interesting at the moment because I'm trying to do something on the 1 minute and watching the 2 minute at the same time. And so I'm kind of backwards here at the moment. I don't know if this is a really great entry or not in terms of where we're at. The delta came in, we barely broke through the open. Yeah, this is going to come back up again. Now the question is a $320 stop. Do I want to leave it at a $320 stop? Do I want to widen it out a little bit to add back into the position if we break these highs? Because I'm still anticipating this low to break. This low here, I'm anticipating this thing to break. How good trading starts. Got to get it back. Did I try 40R chart? Would like to hear your opinion. The what chart? The 40R? What is that, Ram? What is that? Did you tell me about it yesterday and I forgot about it? Yeah, how good. So all good trading starts. Maddie. You, my friend, are absolutely one of those. And I love it. Every minute of it. Oh my God, it's where all good trading starts. Fucking love the 40 range. Oh, the 40 range chart? Okay. The 40 range. Yes, range charts. Okay. I know exactly what you're talking about. I used to trade solely off of range charts. And you guys are going to laugh at me. You guys are, okay, you guys probably laugh at me all the time anyhow because of my idiot, just an idiot sometimes, but it's okay. I used to use what was it, an 8 or a 4? I'd have to look at it again and I'd have to bring it up into Sierra charts. But I used to use, I think it was a 4 or a 6 tick Hakanashi for managing my positions. And I would use it in terms of a trailing stop to smooth out an ATR 21 range ATR of a 4 or 6 tick Hakanashi chart. And that worked really well for pinpointing a trailing stop. Just saying. And look, Maddie, look, I traded myself out of the negative in one trade, mind you, one. It is where all good trading starts. God, you're so insulting sometimes. Are all Danes like you? Or is it just the Demarkians? I hope I don't offend you, my friend. I really do. If I ever take anything too far, just say so. Please, 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 please. You're the last person I would ever want to defend. Much more information. I trade of that most days. For London 20 range is better. And in real RTH. RTH. I know that acronym. I'm very familiar with it. I cannot remember what it stands for. See, you guys are using the acronyms that I used to use all the time, and I forgot them over the last 6 years. Literally, it's crazy. I don't remember jack. Dude, I already said that all good trading starts like that. Nah, dude, keep going, just fun. I recently started testing range charts just because of 50.1 minute candles. Yes, that makes sense too. My session 9:30 open. Yes, yes, yes. The RTH. I'm trying to figure out what I know what it is. It's the US session, but I don't remember what it stands for. Regular trading hours. Jesus. R is regular. Thank you. See, look, 310 now. Not only did I get my money back, I got all of it back that I had originally lost. Okay, let's do this. And I used to trade off of volume bars too. I did that for a while as well. Let me see what you guys are doing with this 40 range stuff. When you're doing the 40 range, are you still utilizing like footprints, or are you just using regular candles? I don't know if I've ever put a range chart on candles before. Oh. Well, look at this. Oh. It's really fast. It's like really fast. Oh. What the hell? Dude, my mind cannot comprehend this. You guys make me feel dumb. God, I'm gonna take my toys and go home. It's like, Tony's dumb. He doesn't know what he's doing. He can't even look at a range chart. But you know what, though? High volume, high volume, high volume. Let's get serious here for a second. High volume. And then the down. And then price action is probably not going to go too much farther than this. So I'm just going to put a profit target in here. I'm back to trading without stops again. That's always good. Wow. It's like, dude, you can't be trading a 1 minute 50-point bars on the 40R. Also, range, you see volatility much better. So when it is fast, you know volatility is absolutely yes. That's what range charts are actually really good for, is getting an idea of market volatility and the volatility that you're currently in, right? The 2 minutes smooth things out a little bit. Okay, beautiful. Hey, you good? Congratulations on your interview. Ha! My son has an interview today at a grocery store, so he doesn't have to work at Tim Hortons anymore. His friends also work at the grocery store too, so it'll be good for him. I like it. Oh, well, I have to get used to this trash again, because man. It has been a while since I have looked at a range chart. I mean, last time I looked at a range chart was probably in 2012. But yeah, 40 range with footprints is goated. Okay, well, Maddie, you know what? I'm gonna have to take a look at that, because I've got to get as good as you. I gotta get a 3.67 profit factor is what I need to do, just so I can keep up with you. And then I'll have to come and visit you in what you guys call it, Deutschland? Is that a thing? I've heard that term before. Is that a thing? Or is that the Netherlands? Oh my God, I'm all confused again. Damn it. This whole Denmark thing. I've never met a Dane before, or anybody from that area, and it just confuses the bejesus out of me. My poor little brain cannot compute that whole area. I just don't understand. And I need to be educated on this. So Deutschland is Germany. This is my problem. Deutschland is Germany. Dutch is Denmark. Germany, Dutch, Deutschland. Do you see my confusion, Maddie? Do you see it? Ring chart with data profile, with delta profile on not bid ask. That's how I do it, but I'm incredibly inspired to use bid and ask. So I could see delta on this most definitely, because if you put delta on something like this, you're going to see a spike at times. You're going to see very low volume and then spikes, right? Am I incorrect there? Am I logic? Just thinking about it intellectually? Dutch is not Denmark, it's Netherlands. We've been through this. Yes, I get it, but I'm always working on other things, and so my mind is only like halfway there on each side. I'm going to have to Google this, because I'm going to have to just spend some time and just focus on this whole concept of the Netherlands, Germany, and Denmark, because my ignorance here is massive. Have to. Bird, welcome. We are demarcating, you know. Because Tony said so. Did you tell your wife? Oh my God, I would have loved to hear that conversation. Yeah, no, see, now I'm all kinds of messed up. I'm down 300, 420 in a position that I should have already been out of. Oh, well, because my target was below the line, it was supposed to be above it. Oh, man. How was this target below and this one? I don't even understand. It's above here and below over here. I don't know. I don't even care anymore. Screw this noise. Anyways, I'm going to have to work on this whole 40 tick range thing because it's boggling my mind right now. But I like it. I do like range charts. I've used range charts in the past. I like range charts because you can get a very good feel to market volatility. But I've never seen a range chart on the Nasdaq. On the Nasdaq before, and this is kind of boggling my mind a little bit. The first time I ever traded the Nasdaq was just here recently. Hey, Tristan, good luck. Have fun. Yep. I'm gonna have to take this kid out to dinner tonight. He just got himself an interview. I think he went into the store and actually talked to a manager, and I think he just got an interview. I'm totally impressed with this kid right now. And now I'm not even, I don't even know what to do with myself at the moment. I'm totally messed up in this trade. I'm totally messed up in what I'm doing in everything here at the moment. You guys broke my brain. My brain is completely broke right now. I'm cooked. Isn't that what the kids say these days? I'm cooked. It gonna go down from VWAP. Could you show the 15-minute chart? Yeah. I wonder where price is in relation to higher time frame. Yeah, absolutely. Well, here's a 30-minute, right? And so we came down into VPOC on the 30-minute. Let's go ahead and throw a 15-minute up. So here's our 15-minute showing us the same thing. No difference, right? Between the two time frames, really. We haven't come down into value area low yet, pretty close, but we rejected there. But I was supposed to be out of the market down here in this area anyhow. Well, not that one, but this one down here. I don't even know where it's at now. Whatever. This. I was supposed to be out here, and we traded through it. But for whatever reason, I was below this area, and it was down here, when on the shorter time frame it was up here, but it didn't fill me. So I don't know. I don't even have any idea what happened. I mean, whatever. How do I get VPOC on this? Or VWAP, not VPOC, VWAP. So I have VWAP here. Do I have to put this at a 15-minute? Is that what I need to do? Is the period value on, wait, bars, last days, just put it on daily, right? And then just put it on one? Is that what you guys do on your VWAP, or do you set your settings different than that? So why it exploded like this, I can tell you why it exploded like this. I need to get this thing off of here though, because I can't see anything with the whole whatever on. We came right down into almost a value area low, right here into this unfair low area. I mean, the low volume node. That's why volume right here is telling us this whole area. We should anticipate price action to reject off of that area. and then the other time frames come in. And what happened at the same time down here in this area? We hit value area low on the daily perspective too. So you know at that point in time, especially without having really a low volume node below us, you're going to have buyers from other time frames in that area. Especially if we broke down through it. Where was the low? What was the low price at? 59.25. Oh yeah, we broke through it. Check it out. So 59.25, right? 59.25 is right down here in this area. And when we came right back through, other time framers are going to be over there buying that as soon as that breaks out of the O2. In fact, we could probably see the O2. Yeah, look, right here. There's O2 right here. You can see, you know, we stepped in at the lows, right? Buyers came in here, tried to reject it, brought it right back down again. Boom. I'm not adding new VWAP indicator, but daily volume profile shows VWAP as yellow dotted line by default. Does it really? On deep charts, Ram? Use the big X up in the corner. So if I go to my menu, okay. Let's bring this back up again. So there it is. So if I go into my menu, is this the menu or is this the menu? God, you guys make me feel stupid. Okay. You press the big X in the corner. This one's going to close the chart. I don't want to do that. I don't have an X in the corner. I swear. Oh my God. I'm not adding new VWAP indicator, but daily volume profile. Daily volume. Okay, so I have a daily volume profile here, but I don't have VWAP on it. Is it just not turned on in the settings? I'm telling you guys. Oh my God. Volume composite days, point of control, value area, VWAP. So VWAP is yellow, enable, highlight, extended line, tell interaction maybe. Line width is 1, dash is fine. I'm going to hit apply and we're going to hit save. See, I can do this much, but why isn't it? Oh, what happened? Did I break it? Okay, but where is it? It's not plotting. There's no yellow. And it should be extending until it's hit. And I don't have anything extending off of any of these. Trolling bro, read the whole message. I tried to, Maddie. Let's see here. Where is yours at, Maddie? Yeah, it's so best way to regulate and adjust VWAP, you press the big X up in the corner, go to your menu bar and open up ATOS, and you do it there. Easier. Okay. I'm not switching platforms. Are you kidding me? I have a hard enough time trying to do this, let alone changing another platform. Can you imagine? Oh, look, it came back. I should just added to the position up here. It came back. Now, oh. I don't understand. I really don't understand what's going on right now. I'm not joking. I'm like trying to figure out what the heck is going on, and I'm live and acting a fool at the moment. Okay, I got that stuff. Use radio button daily delta profile at the bottom on your 40R chart. Okay, so I have the 40R chart, okay, and you're talking about the radio button, which is going to be down here, and you're saying daily delta profile. So there's the weekly, daily profile values right here, right? Oh, well, there's VWAP there. Okay, well, that's cool. Okay, good. So we have VWAP on here now. Yeah. DOY. Oh, that one. There we go. Well, thank you. I appreciate it. We got there. Okay, 40 range. Now let's see if I can make any heads or tails on this chart at all. This thing moves fast. So range here, we came down. I don't have any areas in here though. Well, we're in unfair lows in here. Oh my God. Hold on a second. Wait. Hold on. I have a full daily profile in here. This is okay. RAM. How do I just put RTH on here? How do I change my session time to just be RTH on this chart only? Hmm. Sorry, I'm not talking, guys. I'm not trying to ignore anybody. I'm looking. I'm seeing something here. I'm seeing something and I'm kind of intrigued at the moment. Well, yeah, no, I don't have to actually manually add it, do I? I mean, the ETH, well, maybe so. Well, no, because it's plotting at 9:30 right here, right? 9:30 in the morning. Yeah. Yeah, I just shut off. Hold on. Yeah, I just shut off the electronic trading hour. And so now I'm on the real-time hours only. But I'm seeing something here. I swear that I'm seeing something here. Interesting. Okay, so it won't extend both left and right, which is fine. But Value area high. Came right through. That's what I wanted to see right here. Oh my. Oh my, oh my, oh my, oh my, oh my friends. Okay, let me try something here. Wait a second. Ram, question for you. Question. Because you trade the RTH and you just have your stuff on the RTH and not ETH, right? In the open of the market, how long, what do you give for your initial balance? How much time? 15 minutes, a half an hour, an hour? What do you use for, when do you first start taking your trades in the morning? This is boggling my mind right now and absolutely ridiculous. I love this. One hour's initial balance. Okay. 1 hour's initial balance and then range. Okay. I keep an eye on the 15 minute. Yep, absolutely. Absolutely. Because the 15 minutes is going to give you direction, right? You take the 15-minute directionally. Hold on. Yeah. Yeah, yeah, yeah. It's one of the most profitable trade is 1 hour IB high or IB low to VWAP or to POC in a rotational day. Yeah, I could see that. Now, question for you. In that context of what you're looking at, the VPOC, you put it on to here at the on the 40R. Strat IVB isn't worth it. I should be entered again. Damn it. I should be in some more. Okay. Interesting. Interesting, interesting, interesting. Oh, wait, where's my 15-minute ad again? Okay. Wait. Wait, wait, wait. I'm liking this. I'm liking this a lot. I see it. I see it. I see it. I see it. Mm-hmm. Sorry. I was occupied with Denmark, Netherlands, or Germany. All right. Oh, I'm still long 4. I don't want to be long. I want to be short again. I don't want to be long here. Rude. Oh, I'm way down now. Oh, that's helpful. Okay. All right. Let me pay attention to what the heck is going on here, what I'm doing in these charts for a minute. Oh, this is so fast though. So fast. Yep. Okay. Okay. Hit the range. And the problem is it's hard to see rejection on this time frame because of the way that these bars form in the ranges. Yep. Okay. Now this might come down and just nail my stop here, which is fine. I'll move this down just a little bit further. Yep, okay. All right, now where's the daily profile at? And why can't I see it anymore? It's because we got through it. Okay. I'm just trying to test out and see if I can be fast enough with this. Nope, I can't. Not on this time frame. Okay, which is fine. Which is absolutely fine. All right. So I'm not going to be able to do it like that. I'm just pushing buttons right now. I'm not trying to trade profitably or anything along those lines. I'm pushing buttons to see how I can interact with this chart. New York session VWAP or session point of control, whatever comes first, will be my target or your profit target. Yeah, but I prefer other setups for high rate of return or risk reward ratio, and try to wait for them. Yeah. No, I see it. I see it. I see the merits of this. I absolutely see the merits of this. Huh. Wait a second. Wait. Wait. Hold on. Yeah, we're good. We're still good. We're okay. Okay, we're really good now. Okay. Yep, we're still good. Still good. Now we want to flatten. Not because of the pullback, though. Now, we got the buyers in here. Lower high, short. Lower, do we? Nope. Yes, we do. Okay, I need to flatten. Get out of that position. Longs. Short. Sellers. Continuation to the downside. Oh, flatten. Okay, there's the up. High. Beautiful. Pullback. Let's get a pullback down to here to this area. Sellers coming in. Yep. Okay. Good. Nope. Okay. So there's okay. We're still looking down. Should have been short here. Continuation. Still looking down. And do we want to be flat on the down now? Down. There's the up. Okay. Or high. Yep. Nothing yet. Still nothing. Lower highs. Still nothing. Okay. Now, what happens when we test that high? Test the high. Oh yeah, no. We're coming down. No, we're not. We bounced right back up again. Okay. So up, yep. Still looking long. And see, in here wouldn't be looking long anymore. But where's my short? Where's my sellers? Okay, good. It's looking good here. Yep. Expecting it to hold here. Yep. Sorry, I'm not talking much. I'm actually working on something here. I'm seeing something that I don't know. I'm just testing. I'm playing with it right now. I don't know if this is going to work. I don't know if there's anything to this. I'm not even paying attention to what I'm down or anything else right now. I'm watching this right now. And I'm seeing something, but I'm not able to see it as consistently as I would like to. And when I took this entry for the short, that long kind of threw me for a loop a little bit. But I also in this lost track of the 15-minute chart too. I got too hyper-focused on the 40-minute, but that's okay. Or in the 40R. I'm looking for a continuation play to the upside here. Especially now. I'd really like to be long right now. Interesting. Yeah, what I thought I saw, I'm not seeing now. Interesting. Well, that was fun. 15 minutes back to telling us a potential short in the market. I don't have any volume on here. It's hard for me to read the 15-minute without having anything on it and just price. Let me see the 30-minute real quick. Oh, yeah, we've got plenty of room down on the 30-minute. Well, we do have this area here that I didn't mark that we're starting to come off of. Okay, let's see if this area, since we're in an area here, do I see what I was seeing before? Long, long, long. Now looking for a pullback. Nope. Nope, I'm not seeing it. Okay. Beautiful. Well, that was fun. Well, good times. I'm gonna have to play with this. I'm gonna have to spend some time with this, most definitely. Ram, Maddie, I truly appreciate you guys giving me this toy because I have work to do on this. I definitely have work to do on this. But thank you for the ideas and the information. I truly appreciate it. Trading these evals is so different from trading cash that I'm really going to need to figure this out. What made me down here 30-minute? 30-minute didn't quite get to that area. Where is this? Is that 80 or 60? It is 60. What price am I at right now? 30. So we did get below that area. Let me do this. I want this off of the 30-minute chart. Oh, it's on a 15-minute chart right now. No wonder. Okay. Let me throw this onto a 30 again so I don't mess anything up for tomorrow. Also 40R, I only look at when at a point of interest. Yeah, my last entry criteria almost. Yeah, absolutely. Yeah. What did Maddie say? Strat IVB ain't worth it. Yeah, no, I don't. So the IB levels for me, the reason why I look at IB levels, and you guys can chime in on what you think on this. There's times where we can be rotational within IB within itself. And it doesn't happen a lot, but it happens usually only when we do not get a significant close outside of IB itself. And the IB ranges can be helpful in that context to just trade around the range within IB. But you also don't need the lines to see that either. And you can see when that's happening on your longer time frame perspective as well. So I can absolutely see why not to have that strat on the charts at all. The other thing that I do like with that, though, is it does come with the standard deviation from initial balance. And it's an easy way to visualize that. And a lot of times price action will stop once it gets there. And yeah, no, you really don't want to use this range chart until you are in an area of interest, because you can't follow it. So let me try something here on the 15-minute. And anybody coming in through TikTok and those type of things, or listening to me right now, I'm working on developing something on hold on a second. Maybe that. Oh, that's right. Where is that at? Is it aggregate? Yeah, it's aggregate that I'm doing. Okay. I'm working on something, and it's all designed. I'm trying to figure out how I can provide an easy analysis for beginners. The way the Deep Chart boys are trading the IVB and promoting it is completely a lie, waste of time. Yeah, I've seen multiple back tests that it is a 55% win rate at 1 hour strat, so only big money can make money. Maddie, yeah, no, I hear you, definitely, I hear you. And what I'm looking at initial balance for is to have the lines of initial balance, because what I would used to do is like I would start trading at 10 o'clock and New York time, and I would take the range of the first half an hour of the market, and I would put lines there, just like we have lines here. And I'm not looking at it in terms of breakouts and direction or anything along those lines. When you're trading in value of the 30-minute chart and you're in initial balance, right? You're anticipating some form of rotation. But when you close outside of it, it can move back into rotation, it can consolidate right above it, and it can possibly break out and start a trend continuation. So I'm using the lines not to tell me a breakout, not to tell me anything up here is in 26% of sessions, blah, 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 bias, any of that. It gives me a range that I can utilize for rotational trading, and it gives me an index point to start looking for a potential trend development when I'm in trading imbalance on my 30-minute chart. So when I'm here in this orange in actual balance in value on the 30-minute chart, initial balance can help me pinpoint if I want to start trading directionally or I want to continue to fade direction. For new traders, you may ask them to look for additional confluence. Most definitely. That's where I was kind of going with all of this until you guys, got me onto this the 40R chart and a different other things. I had a plan for today, and that plan got in no way or shape, form, or fashion did it get derailed. It got changed. It got adjusted, right? So I'm looking at a bunch of stuff right now rather than coming in and actually trading the charts. And so I'm looking at this stuff and I'm like, I'm perplexed with some of it. And in that context too, Maddie, when it comes to the IB, right, and those two, and the two lines I'm talking about, even the two lines that get formed here, right? There's when the how do I word this? What is it that what's the point I'm trying to make? I lost my train of thought because I had another thought and then I lost it. Um yeah, I don't remember. Let me see what happens. It's the tidal rotations, like this right here. Let's say this area right here, right? This directional move. Let's say this is IB high and we close above that. We come back into IB high or IB high. That would give me an indication to scalp to the long side until we get to the other side of value. And then when we come back into that range, now I'm no longer looking for that rotation up. I'm starting to scalp now into the downside. That's it. That's all I use IB for, if that makes any sense to you. It's kind of like using yesterday's high, yesterday's low. The same type of an same idea behind it. And then if like the IB range, the first half an hour is within the range of yesterday's high and low, right? You can look for at a very tight rotational day. And if you have a very tight rotational day, you're going to trade that completely different. And if there is a breakout of IB, you're probably not going to take a long off of that because you're still within the context of an inside bar of the previous day. It's that type of analysis that I'm looking at in the context of initial balance. Oh, I'm still in a position. Yeah. I guess it tells me right here too, doesn't it? I forgot. I was actually in a short down there. I forgot that I entered that. Um, Let me see. Where am I at here? So this is the 15-minute. I can't see anything in with this. So I've got to adjust this completely. I don't know how to. I don't even know if I need this. I don't even know if I want it. But um yes, that. And then let's see here. 2-minute, double it. 2, which would be about 7, 820 maybe? Maybe? Well, that didn't change anything at all. Yeah, I don't know. I don't think I'm going to use that in that context. Let's see here. What do you have going on here? It makes sense as with most things trading, you got your own spin on it. Yep, wouldn't have it any other way, dude. I love it. My stats was only for the mechanical way they teach it. Fugazi is it right? Exactly, right? And that's the whole thing, right? Um the the guys over at Deep Charts, that are doing the trading and those type of things. Um, I think that there's merit in what they're doing. They're also doing, a ton of scalping, um, which is very difficult to mimic. And that's one of the reasons why I want to try to get away from more of the scalping and more of the day trade. Because if I can get that down in the context of a day trade, a longer term trade, right? As I'm bringing individuals in, it's also easier to copy trade what it is that I'm doing on the screen. And that's not necessarily what I want either. So there's a fine line here. And I think what I'm going to need to do is I've been spending a lot of time behind the charts the last week, week and a half, 2 weeks. A lot of time. I mean, I'm talking about like think about as much time as I've spent streaming, I've spent behind the charts and then some. I think I need to step away from the charts for at least a spell. Not 24 hours or anything along those lines, but I'm thinking like this evening, for example, and really nail down what it is that I want to teach and demonstrate in this concept. And when I think about that, I don't want to just to be clear, this wasn't shitting on deep charts. Yeah, it was only to talk about this strat they share and talk so highly about. Right, exactly. A little warning if we call it that maybe. No, absolutely. Yeah, absolutely no. And I mean, and no, I didn't think that you were talking about deep charts or even them as traders at all. I heard it as an interpretation of that one individual strat itself, right? And then that got me thinking about the whole process over at deep charts, right? Again, not to talk bad, not to be negative about any of it, of any stretch of imagination. It's I see what they're doing over there, and what I'm doing is I'm saying, okay, this is what I like. This is maybe why I would change. But then I'm like, well, but I don't even know what I want at this point in time, exactly what I want. And if I'm not clear on what it is that I want, as I'm developing this, I'm going to be all over the map. And if I'm all over the map, I'm not going to be a benefit to anybody. So I need to get very, very, very clear on what it means to develop traders. Not to teach a strat, not to teach a methodology, not necessarily to be focused on copy trading or anything along those lines. What does it actually mean to develop into a consistently profitable trader? What does it actually take to make that happen? And then how do you create that? That's where I'm at. And I don't know. I don't know where that really starts and where it ends. For new traders, then, you may consider telling them PMA, what you anticipate during session. Yep. And tell them your playbook. Yep. Based on if conditions. Yes. For that, they need to start understanding VP in detail. Absolutely. And that's why I started with my volume profiling, right? Absolutely. But then I also need to trade too on my own side, right? Then do I take that trading and turn it live? Do I adjust what it is that I am doing? Do I even care about prop at that point in time? Or am I merely just going to trade my own cash and then let them figure it out on the back end? See, and that right there, that doesn't sit well with me because there's no demonstration there. It's all talk at that point in time, right? All you're doing at that point in time is sharing information that could possibly be turned into a strat, and now I don't see the value in that. There's something I'm missing in all of this. And I'm going to figure out exactly what that is. I had my aha moment earlier today when I was trading, and it got me to see that I need to make an adjustment to my money management and those type of things. And that's what I came in here to do today, is to focus on that and to work on that process. Well, that led me to the 40R. That led me to VWAP. That led me to the 15-minute chart. That led me to, a lot of data and a lot of information, right? Not sidetrack, not, anything along those lines, a lot of information. So now I have a lot of things on my screen that I didn't have earlier this morning, but I'm not any closer to answering those questions for tomorrow. You can trade in your prop accounts, but not sharing with them. It is for them to learn execution and risk management. Well, it is, absolutely, right? But when you're live like this in this type of session, okay, and you're like, look, I'm here to demonstrate at the live edge. Like today, right? I took a $1,350 expense in a $4,500 prop account. Okay. And it didn't faze me. But then there's times where I was sim and the pressure of trading live in front of other individuals kind of got to me. And it's that demonstration. It's to be able to show that process when things break, just as much as when things are going good, because that's the demonstration that's necessary in this full process of developing into an actually consistent, profitable trader, right? Because the majority of this is not about strat. It's not about entries. It's not about exits. It's not about any of that. Most of it is, how do you handle the shifting market conditions? How do you handle the stop out? How do you handle that other information that's coming at you? And how do you return to your strat to do the things that you're supposed to be doing? This and it goes into trading psychology, it goes into strat, it goes into all of it, but it's so much more than just trading psychology. It's so much more than just the strat. And what I'm attempting to do here is to demonstrate all of that at the live edge and let the demonstration speak for itself. The user platform, Tradeovate, trading, deep charts, whatever it is, but you give them your profitable trading ideas, where to profit target and how to manage stop loss. Yeah, kinda. Yeah, that's kind of where, what I've been doing, right? In a lot of ways, and especially in teaching the auction market theory and how to manage positions around that. There's something I'm fundamentally missing that puts the pieces together, and I haven't put my finger on it yet. And I thought that I was really close today in figuring that out, and I was really excited to come in here and get into the charts and look at this in this context. And now I'm doing something completely different, which is really good, actually. It's a really good thing. Why? Because it's showing me that even with new pieces, something is still missing. I'm missing the connection that puts it all together. Not the framework, not kind of the glue. It's like I have a model, right? And it has a little nubs on it that you can kind of just put it together, but it's not staying together. I need the glue. And I'm not quite sure what that is yet, but I'm going to figure it out. And so what I think I'm going to do is I'm going to take a break from the charts. I think I'm going to just kind of chill and just do something just mindless. Maybe watch a dumb movie or something. I don't know. Even better, put an anime on because I won't care. Just let my mind wander. And I bet you when I wake up in the morning, it's going to come to me because that's usually what happens. I need to go to the barber. I gotta get my beard done. Yeah, I think that's what I'm going to do. I like that idea. That feels right. So, on that note, I want to thank everybody so much for being here. Maddie, Ram, I really, really, really appreciate your guys' insights today. So appreciate your insights. I am going to relax for the rest of the night and see what comes to me. I think that's a really good idea. So thank you everyone for being here. TikTok, thank you so much for being here. Apologize if you felt like I was ignoring you today. It was not my intention by any stretch of the imagination. A lot of information thrown at me. As you can tell, I'm still learning the Deep Charts platform. I don't know it well at all. I just got it in June. I put a bunch of templates on it, and that was about it. I still don't know exactly how this thing works, but I'm going to get there. Thank you, Ram. Appreciate you. Maddie, if you're still here, thank you so much for being here. Thank you for your insights. Appreciate you. Ram, always the same thing goes to you as well. Truly, truly appreciate you. And I'm going to get out of here for the evening. So until next time, be safe, be kind, and know that you are loved. Thank you, everyone. We will see everybody tomorrow.